How two businesses with the same seller discretionary earnings can sell for two different prices. What's the reasoning behind that? Today, we'll talk about that as we have over the past few weeks. Remember that for the couple of weeks, we've been talking about the cash conversion cycle, and we've been looking at what we call activity ratios. And those are primarily how we manage our inventory, how quickly we turn it over, how quickly we sell it, how quickly we collect receivables after we've sold something on credit, and then also how quickly or slowly we pay our vendors from whom we've bought raw materials to make this product and service that we sell to customers. Remember, that's the issue that is going to keep a new buyer up at night. It's not the price, it's not the terms, it's not the facility, it's I have profit, but where's my cash? And that is going to come to roost in about 60 days after they have taken over the business. So we really have to anticipate that question and make sure that our buyer is set up for long-term success. And that's why these profitability and activity ratios are so important. The number one reason for deal failure is not overpaid or bad roof on the building. It is lack of cash flow, lack of capitalization. When they started the business, they were behind the eight ball from day one. So we're thinking about that and how that impacts the most probable selling price as defined by the International Business Broker Association and the International Business Glossary. That's our standard of value in BizProValue. We're using all of the proper theoretical constructs of an appraiser, but we're doing it as a calculation of value or a broker opinion of value. We're using the correct methodology, but we don't have to be a certified appraiser to do math, right? So we're using the same math, and we're using our judgment as brokers, your judgment that you have developed and you've been taught and you've experienced about pricing a deal. All right, so today the topic is unlocking your path to profitability with embedded analytics and generative AI. And that's what builds BizProValue's intelligent calculation of value reports. The embedded analytics and generative AI will make a world of difference for us because BizProValue will automate all of those calculations and analysis of those calculations and numbers and use generative AI to develop a report that explains everything, that illustrates everything. And today, we'll be focusing on the profitability and activity ratios. Profitability means things like gross profit. Activity means how quickly do I turn over my inventory? All right, so we have embedded all of those analytics in BizProValue, and we have included generative AI so that a narrative is written for us so that we can see the complete range of analysis on the company, and we can see its performance strength rating, which will give us some insight into which multiple should we select. And that's why two businesses with the same SDE can sell for two different prices because of our analysis and with Gen AI. Let's look at the next slide, shall we? All right, so the broker challenge is brokers not using this technology spend hours and days at manual spreadsheets. I looked at a demonstration for a valuation software that was Excel-based, and it looked like Pandora's box. If you spend X hundred hours using it, you'll figure out what all those cells and rows and columns and worksheets and drop downs and lookups mean. It takes hours and days, even with the best spreadsheet. And it's very difficult to produce a consistent report. How do I take this Excel stuff, copy it into something else? Maybe I'll use Zapier or something else there, but it's typically very difficult. And as a result, because the story is not clear, it's difficult to justify the price to clients like a seller, particularly when that seller who has developed this company over time and has deep connection to it and is very proud of it. If this business is not performing as well as another company, it may not sell for a premium. And that's a difficult message to see and communicate. But the faster that we understand the real story, the faster we get to good deals or transform, I will say, bad deals to say, let's price this deal appropriately so that it will sell. The difficulty of not using that technology typically is we're missing out on premium fees. Technology supports that outcome. Okay, so the features here in BizProValue include TaxTract, right? We can upload any U.S. tax return, whether it's the sole proprietor, 1040 Schedule C, the 1065 partnership, or the 1120 for the corporation, and most commonly, the 1120S for the S corporation. All of those will upload, and remember that we use a common chart of accounts. Now, there's an important question on the Schedule C from the 1040 tax return, right? And that question could be, where is officer compensation on the 1040 Schedule C? Great question. That has about 27 or 30 different rows. And our question is, where is officer compensation for the sole proprietor? And the answer, there isn't any officer compensation on the sole proprietor because the ordinary business income flows entirely to the personal level. That is the amount that the officer earns. And that amount should be adjusted in our normalizations because we want to include that officer compensation so that we have a distinguishable and different EBITDA and seller discretionary earnings. A smaller number, SDE will be a bigger number. So EBITDA is smaller number, bigger multiple, SDE, bigger number, smaller multiple. And when we have that officer compensation dialed in correctly, the values developed by either weighting EBITDA as the economic benefit or seller discretionary earnings as the economic benefit may in fact be very close to one another. So that's one of the reasons why when we use TaxTract, we want to normalize those expenses so that we're fully representing and fully using both multiples on EBITDA and seller discretionary earnings, right? Okay, so then we have embedded analytics, and that's primarily in the performance valuation assessment. So the demo, we're going to upload the 1120S. We'll immediately see the analytics that are provided. And here is where it's going to give us market multiple guidance. Should we sell this at a premium or should we sell it at a discount? And then we'll see the use of generative AI to develop the narrative content, even the financial analysis. So with one button click, we have our calculation of value. BizProValue has developed a photo image relative to the NAICS code that you used in your project setup, and it has all of the content. Of course, your logo would be applied here. You can change your coloration, matching, branding specifications, and including this performance comparison. And now you can see that this narrative text here, all of the analysis on this set of profitability ratios and activity ratios are now reflected not only in numbers, but also in words. So in this case, though, you can see I have all of my other deductions. We can see that I have removed the interest expense. I left in depreciation in row 14 because BizProValue automatically calculates ordinary business income. It calculates EBITDA as ordinary business income plus interest plus depreciation, right? And then SDE is EBITDA plus officer compensation. And remember, it's important for us to leave officer compensation in, and I really prefer to leave depreciation expense in because that's going to accurately develop EBITDA and SDE. If I do not have, or if I have removed officer compensation, then EBITDA and SDE are going to equal, and EBITDA is going to be overstated, and it's going to skew my performance analysis by overstating the operational efficiency of the company. That's why we like to leave those numbers in. Now that we have this, I want to take you to performance comparison. And now you see my subject company comparison between how is my subject company performing to the same size company in the industry for profitability and activity ratios. All of the analytics are already done. And here you can see that we have this 999.99. That's a sentinel or a proxy for zero. Math doesn't work if you've got zero in the denominator, right? So we leave it there, and it still gives us this zero for days inventory and payable outstanding. This is gold. This typically exceeds what most appraisers do by looking at only 1 year of data and not a comparison group and the industry. They may have analysis and ratios for all years, but they typically are including only 1 year for the industry and typically not including the comparison group. Now look, we've completed this performance valuation assessment regarding our subject company, and we're indicating all the information now in narrative form so it interprets the ratio analysis provided here. And here's an important key. In this case, we have a premium of 59.32%. Based on our analysis of this company, the performance strength rating might suggest this deal sell at a moderate premium. If I had different data, it might say neutral or moderate discount. So this gives us some insight into why one company might sell for more money than another company, even though they have the same SDE. And the point is that here we have premium ratings on ordinary business income, profit before taxes relative to total assets, EBITDA, and seller discretionary earnings. Our gross profit is a little bit lower. Now, keep in mind that gross profit is driven by the chart of accounts and how a particular company manages those chart of accounts. So I like to focus on EBITDA and SDE. In narrative terms, we can see that gross profit is trailing, ordinary business income is outperforming, profit before taxes is significantly exceeding the comparison group, and EBITDA was outperforming both the comparison group and the industry. Seller discretionary earnings also exceeding the comparison group and the industry. This company's SDE is 18.63% of revenue compared to 16 and 11%. So now we see this scorecard. The company made a lot of profit, but their cash flow is slow. They're not collecting their receivables. They're not turning over their inventory. They're taking a longer time to pay their payables. Their cash conversion cycle is slow. I have profit, but I don't have cash because of this activity ratio analysis. Therefore, when I come to most probable selling price, I can come and say, I'm going to set this deal at that 58th percentile based on that performance strength rating. And because it's under $1 million, I'm going to put value on SDE. Therefore, I'm going to create my calculation of value. And here we have all of the content that we entered. In just a second, you'll see the photo that BizProValue generates relative to the industry code. And we can see all of our information, including a short description of the performance, profitability, and activity ratios and how that impacted things. Here we have it in narrative form. So we don't have to be an expert at making the calculations. We should be aware of the calculations. We can trust the calculations that are embedded, and we can rely upon the AI to write much better content than I could write at a much quicker time. So here we have all my content, my price. We include a glossary. We include the 3-column recast with our notes that show up all in our one touch, and we can download that. I hope you have a great rest of the day and have a great weekend. Enjoy some sunshine and get outside. Thanks again for joining us. See you next week.